My name is Garry Davis and I wish to introduce an exciting new service that has been added to our stable in recent months. Structured the right way, I believe it's one of the great reward for risk opportunities of this decade. There's my licensing information and a reminder that this is general advice in this video. And the stocks that I'm going to talk about, I own them all in the way that I will describe in this video. All right, now this is a typical representation of a typical price cycle for an early stage developer of a mine through to ultimate production and maturity. Now, I had always worked or sought to work in this area here. So as the project was progressed sufficiently to be largely de-risked, perhaps in the 6 to 12 months leading into actual commissioning and production. Because my approach to the market is to work very hard on managing risk, and if your process is sound, then the profits just tend to take care of themselves. So I hadn't ever done very much down in this area here because I just didn't find the risk for reward appealing. But there's been several things happen in the last couple of years that has certainly changed my view of what the opportunities are. And it's largely because of the power and the predictability of the tailwinds that are now evident in particularly in the battery materials area, but also in some other areas as well, and they will contribute to these opportunities as the decade unfolds. So I really, truly think this is a wonderful opportunity. All right, so let's look initially at milking the megatrends and what the market reality is from, there's always been massive opportunities in early stage mining stocks and large multi-bagger returns, 10 baggers, 20 baggers, even 50 baggers. If you can get in early enough, it's hard to do, but if you get in early enough, there's been some enormous returns. There always have been and there always will be, and I'll show you some examples of that. But it's extremely difficult, or it's been extremely difficult to enter in such a way that most investors can live with the journey because it's high risk and it's hugely volatile. And most investors either don't want to start that process or they get partway through it and they get cold feet because, the price just goes down too much. So the essence here is the how-to. How to avoid getting bumped out. How can you structure the trade and how can you think about the trade to give the opportunity to provide the rewards that are certainly there. So for me, it's about risk and it's also about probability. There's lots of stocks that have a lot of risk and potentially a lot of upside, but the probability of that upside is not necessarily all that great or all that definable. And that's the thing that's changed for me. It's the probability that over time this upside will be realised. So early stage businesses always carry much higher risk, so everyone needs to accept that. And prices as a consequence are always more volatile because there's always a significant difference of opinion between traders about what something is worth in the early days. And the reality is that some stocks will fail. Some stocks will be outrageous successes. They'll be 10, 20, 30 baggers. And in a basket of well-chosen stocks, it only takes a couple to make the overall basket profitable. And that's the essence of how to attack this particular market. I'll have more to say on that in a minute, but let's look at some charts to put some substance to it. So these are just some of many, many charts that have moved a substantial amount in lithium. Core lithium has moved from in November of 2020 until April of 2022, it moved 33-fold in 16 months. But as I said, it's all about the how-to because there was still plenty of volatility along the way. And so you need to make sure that the essential fundamental criteria are being ticked. And then you need a robust technical plan as well. So there's one example. But as you can see, from April 2022 until the current day, the price has really gone into a very, very large consolidation. This is De Grey Mining in gold, a 32 bagger in 7 months from here to here. Now, that's not to say that you would be able to get the whole move, because that's almost impossible. But I'm just making the point that that is the move that can be milked, to take a portion of it. This is Chalice Mining, a 45 bagger in 15 months from here to here. Since then, it's done very little. But it was a 45 bagger. This is Boss Energy in uranium, a 4 bagger in just 11 months. Capricorn Metals, again in gold, a 12 bagger move in 34 months. So there's absolutely no question that there are hundreds and hundreds of these opportunities over a period of 5 to 10 years. But as much as these moves are incredibly exciting and incredibly attractive, this can also happen. And this was largely the reason that I didn't ever really indulge in this part of the market, because this was so unpredictable. And the probability going back 5 or 10 years, I didn't believe was sufficiently high to warrant the risk. But now I see things differently, because particularly, the climate change imperative and the amount of conviction and money that governments around the world are throwing at this, I think has changed the probability of long-term success. But you've got to recognise that this can happen. Or this one. So, massive moves, in this case from 5 cents to 85 cents and all the way back to 5 cents again. Or this. Now, this is a topical one, because this is a extremely attractive long-term rare earths project, but it just got overhyped. And if you buy into the hype in an area like this, then there's a very, very good chance you're going to lose a significant amount of money. So the how-to is incredibly important, and that's what I want to talk to in just a moment. But don't forget, to wrap it all up, that these sort of moves, a company that's very much in the spotlight, PLS, Pilbara Mines, a 10-bagger move in 16 months in a stock that is now basically a global giant in lithium. This is what is achievable with a clear plan and some time to let it unfold. And it doesn't need 5 years to unfold, but you probably need to be thinking in terms of a couple of years. So just think about, what if this was a core holding that was appropriately sized, that you could just sit on and give it its head and let it see where it runs, and then periodically you traded another portion, buying weakness, selling into strength. That's the essence of a clear plan. All right, let's put some more detail to it. So what do we need to do to successfully deal with the risks in this area of the market? Well, first of all, you've got to research very thoroughly to establish the targets. Build a basket of 10 to 20 small holdings. I think 10 is a minimum, because, as I said at the start, some will fail. Some won't produce what you expect within the time span that you expected. And some will be outrageous successes. And we don't really know which is which. We don't know when the market is really going to get excited about a particular stock. So you need to hold a basket with a broad enough diversification to tap into that effectively. We only want to buy on extremely favourable terms, but there's only a certain amount that we can minimise the risks. There's always going to be volatility risks with these stocks. But the most important thing is we need to provide enough time for the probabilities and the development of the project to work. If you expect a return in 3 months or 6 months, then you may or may not get it within that time period, and it'll just be an element of luck. We don't want to approach this requiring luck. So we want to give it enough time for the story to unfold. So we need a plan, it's very simple. There's nothing complex about this. We need to apply good discipline. And most importantly for virtually everybody is that you need a master of ceremonies that can keep an eye on the potential basket of stocks, because the entry for a particular stock may take 6 months to materialise. And it's very easy to lose sight of a stock where you've done the research, done all the homework, you're convinced that it's going to pay off big time over the next couple of years, but then the price takes off without you because you've just lost sight of it. You got a bit bored with following it when it wasn't doing anything. So you need a master of ceremonies who's all over this entire basket of stocks basically every day. And, I can't overstate the importance of that. Now, the current focus is on battery materials. I think everyone accepts that. It's pretty volatile at the moment, but almost every battery material element is either in long-term structural deficit now in terms of supply and demand, or they will enter long-term significant deficit in the not too distant future. So why is it different this time? Well, I think it's the probability that the tailwinds are going to be sustained, and we've got this global acceptance now of the imperative to tackle climate change. Whether you are in agreement with that or not doesn't matter. Everybody is pretty much on board with that. Governments are throwing extraordinary amounts of money at it. The reality is that it's going to require many times the effort that's currently being put in. So this, if net zero by 2050 is going to be achieved, then this whole process is going to have to accelerate, not decelerate. So what has changed? Why is it different this time? It's the probability that it's going to play out as we expect. And then in the wings, of course, cloud computing. These are not ones that I would be tackling now, but in the wings, we've got cloud computing is going to become a massive theme. Artificial intelligence is building momentum rapidly. I believe at some stage, whether it's soon or whether it's in the next few years, I believe gold will come into its own. We've also got robotics, and there's probably several others that I could add there. But the point is, we've got megatrends that have got powerful and highly probable tailwinds, and there's an opportunity to milk them. And this is one of those opportunities. Now, these are the elements of a plan. First of all, this is not the entirety, but this is the broad brush elements. You need to decide what percentage of your portfolio you're going to allocate to these early stage basket stocks as a whole, taking into account your personal risk profile and the amount of high volatility that always occurs in this area. And this is a very personal decision, but it's one that you need to make. You don't want to just go buying these stocks and hope, cross your fingers. It's not going to work out very well at all. You're probably going to lose money if you do it that way. So you need to plan this out, understand how much money in total you're going to put towards this. Then you're going to be holding, that I would suggest, at least 10 stocks as a minimum. So the must-haves to improve the odds of success, because we just want to put layer upon layer of risk management to this. There are so many hundreds of lithium and copper and nickel and rare earths and uranium stocks out there, but there are only a relatively small number that have got what I would call the X factor. That is, they've got a resource that is world-class. They may have management that is considered the absolute best in the business. Whatever it might be, they've got to have an X factor that gets the market excited. And they're pretty much the only ones that I look at. If I look at a project and I look at the management team and they don't have an obvious X factor, then I just move on, because there are enough of those X factor stocks to make the exercise worthwhile. Highly skilled management is critical. That is one way that you can improve your odds of success. Highly skilled managers that have done it before, they've got a track record of success. History shows they just keep doing it over and over. And then we need to tick most of the essential checklists. So I'm talking about things like availability of infrastructure, power, gas, roads, rail, all those sorts of things. And there's a considerable checklist which also goes into the geology and the mineralogy of the resource. Then we get down to how do we buy them? Well, we need to have a big target list because you don't want to chase the prices. That is one thing that you don't want to do. You want to have a big list. They all want to qualify with the X factor, but you just want to let the prices come to you. Don't get your heart set on owning any particular stock. Just buy what becomes available as a good deal. You need to be skilled at reading chart patterns because these are pretty volatile, and if you want to minimize your initial risk in getting in, then you need to be skilled at reading chart patterns. And then be aware of the mining development price cycle, that diagram I showed you right at the start of this presentation. Just be aware that there are times when you can get in that stack the odds in your favour, and there are times that you can get in that are highly dangerous, and you definitely don't want to be getting in at that stage. So that's the essence of the opportunity, which I think is terrific. I've been working on this now for some time. It's been gradually released into the Insiders Club, gradually because we need to stagger the entries. We don't want to throw a whole lot of money at these stocks when they're in favour, because they will go through a period where they're a bit out of favour. So you want to stagger the entries over time according to market conditions. Now, these sort of stocks are not for everyone, but in my opinion, the rest of the Insiders Club is. I think the Insiders Club offers something for everybody. So the opportunity to gain exposure to these stocks, join the Insiders Club, and you've got access to 3 very discrete but very different portfolios that are suitable for different kinds of traders and investors. We've got core investment stocks, which are my ultra high conviction stocks for the long term. You want to think about holding them for 2 to 5 years, and the track record of this portfolio of stocks is building up extremely well. Then we've got the early stage basket, and it also is more of a buy and hold approach. Not a lot to do here. Buy it according to a plan. Position sizing is critical to your ultimate success so that you can stay the course, but not a lot of activity in those 2 portfolios. And then there's the rest of your portfolio that you can devote to trading, and there's shorter term trading opportunities that might exist for weeks or months. So there's something for everybody in the Insiders Club, in my view. The offer, $220 a month, is the offer. It's just a month-by-month subscription, and there is plenty of assistance with framing your plan. If you're not confident, I can give you the questions that you should be asking yourself to help gain clarity around what your plan, your simple plan, should look like. And then there's substantial email support as well that goes with that, because market conditions change. And I think the most important thing that traders and investors need is someone that's got a clear perspective on the market, so that you're not caught reacting to short-term moves, so that you remain in tune with the bigger perspective. So that's the offer. There is a link to the information on our website, and I hope that this is suitable for a number of you that are watching this video. That's it for now. Cheers.